Welcome to the Trading Exercise channel. This is probably the first video with voiceover. Many viewers suggested me voiceover for better understanding. To be honest, only 2-3 people actually said it. Some even understand better without voice. But since staring at screen all day keeps my mouth shut, I thought this might be a good way to open up. Just kidding. Using voice helped me to explain concept more clearly and build stronger connection. Whether you prefer text or voice, the goal remains same, such as breaking down setup, analyzing market structure, and improve decision making. In this video, we will dive into an SNR SND-based setup, breaking it down step by step. Make sure you find similar scenarios and practice, because mastering trading is all about repetition, whether you agree or not. Let's jump right in it and get started. Market structure is key for any setup. Identifying location and origin is very important. This video breaks down the setup step by step. Make sure you find similar scenarios to improve your decision. Practice, and practice. This is the main goal of this channel. After spending 3-4 years in trading and experiencing many losses, one realization is fully clear. Creating a strategy is just 20% of the process. The remaining 80% includes psychology, discipline, and risk management, which traders often underestimate. Understanding support and resistance, supply and demand plays a crucial role in improving trade execution. Recognizing these levels on high time frame helps in making better decisions. So without wasting time, let's dive into the analysis, breaking down the setup, and we will see how the market structure aligns with our decision points. Watch closely and takes every detail matters. Our decision point is based on breaking of multiple ranges. Typically, price consolidates before breaking a strong SNR, forming a rally-based rally. However, in this case, SNR and SND are not aligned. Instead, we use SND as a decision point because it offers a better risk-to-reward ratio. If you zoom out, you will notice that our SND zone is essentially a double Marubozu, a pattern known for sharp entries. This setup increases the probability of a strong reaction. Before entering into the trade, it's crucial to analyze multiple parameters such as market structure, liquidity, and confirmation signals. Identifying these factors helps in making a well-informed decision. A strong setup is not about just entry, it's about context. Let's now dive deeper into how price reacts at this level. When price reaches a supply zone, there are several reactions can be possible. In first case, price reacts from supply, then moves downward. Another case is price breaks the supply zone and then moves higher. And the third possibility is price briefly breaks the zone, trapping buyers, then reverses down. And the last case in which price fakes a drop, trapping sellers, then moves up. For such situation, understanding market structure is a key to reacting correctly. A strong supply zone often causes rejection, while a weak one might get broken. Liquidity traps also play a role. Institutions often manipulate price to trigger stop losses before the actual move. To trade effectively, we wait for confirmation like candlestick patterns, volume shifts, or break of structure before entering. Patience is a key. Reacting too soon can lead to unnecessary losses. Let's now analyze how the market behaves in real time. We are currently in a supply zone with price ranging near it. A short entry is expected, but there are no clear signs of downward movement yet. The decision depends on market structure. If price forms another break of structure to the upside or downside, we will decide what to do. Typically, on the first attempt, price doesn't break below immediately. Instead, it might consolidate, fake out, or even retest before making a decisive move. Patience is a key. Forcing an early entry without confirmation can lead to unnecessary losses. To get clear picture, let's use bar replay and analyze price behavior. Watching how price interacts with the supply zone will help in identifying the best entry point. Let's hit the bar replay button. Alright, price is near SNR and we are watching for a break. Since we are in a supply zone, going short makes more sense than taking a long entry. Now if you are thinking about a long position, the best spot would be a V-shaped retracement, but here is the catch. Earlier the price went straight to the supply without forming a proper decision point. So what does that mean? Simply no clear decision point, no confident entry. Jumping in blindly can be risky for long. Now let's again hit the bar replay and see what happens next. Will the price respect supply and drop? Will it break through and keep going? Or maybe we will get a fake out. Let's watch and break it down together. We are expecting a break of structure to the downside, but instead, we got one to the upside. That gives us potential long entry. But hold on, we are still near the supply zone. The safest approach? Wait for clean break of supply before making a move. But hey, when do we ever play it safe? We are here for challenge. So, before jumping in, let's analyze, is this supply weak or strong? On the H4 time frame, there is strong engulfing candle, a potential sign of strength. But zooming out, we will see the supply zone is near demand, which raises some question. Switching to a higher time frame, we might get a clear engulfing pattern. Checking on the daily time frame, we spot a clean break, suggesting that this so-called danger zone might not be stronger as it seems. Just kidding, it's weak. I know what are you thinking, is still feeling unsure. That's natural. Doubt is a part of the game. But let's clear things up with a simple confirmation. Simply draw a trend line. If it breaks, the market character has shifted. If you understand liquidity, you know there is more to it. But we will not dive into every detail here. At the end of the day, it's better to take action and make mistakes rather than sit paralyzed by fear. Overanalyzing every teeny factor, that's one-way ticket to never entering a setup. If you have a solid risk tolerance, take that trade, no second guessing. Alright, enough of the lecture, let's see what happens. Our decision point worked out successfully, whether we were confident or not. Just kidding. I was skeptical too. For this setup, you can hold the trade or target the last supply zone. The final TP can be the major supply zone. Key lesson: patterns alone are not enough. We need multiple confirmation before entering a trade. But at the same time, over-analyzing everything can lead to analysis paralysis. Find the balance, trust the process, and keep improving. Alright, there is a wrap for today. We will back with another setup breakdown. Whether it's from top to bottom or bottom top doesn't matter, as long as you keep learning. If you truly want to master trading, aim for 1000 setups. Experience is everything. If you find this video helpful, like, share, and subscribe. The only thing I ask from you, just kidding. I know I said 100 times just kidding. But before we go, let's not forget something important, the liquidity trap. Sooner or later, price hunts liquidity. It's almost inevitable. Smart money moves first, retail traders follow. Understanding liquidity is what separates pros from amateur. In the next video, we will dive deeper into liquidity traps, how to spot them, and how to use them to your advantage. Stay sharp, keep learning, and I will see you in the next one.